Hello everybody, this is Mega FX, and in today's video I'll be talking about liquidity. I'll be talking about how you can master liquidity. Liquidity is very important if you want to succeed as a trader. If you want to succeed as a trader, you must not joke with liquidity. You master the concept liquidity, how you identify it on your chart, areas where you spot liquidity on your chart, because there is no strategy that will work for you very well without you mastering liquidity. That is where you see that some traders use a particular strategy, it works for them, but when another person uses it, it will not work. Why? Because the person that uses the strategy knows exactly how to spot liquidity on the chart, to spot liquidity put on the chart. So the thing is that if you are able to spot liquidity, then you take liquidity to your advantage. But if you are unable to spot liquidity on your chart, you become the liquidity. Liquidity is simply money. People stop losses, buy order, sell order. Liquidity is what drives the price, what drives the market. That is why you see that whenever you have a drastic move, it was caused by liquidity. After market must have taken liquidity. After after market is done with manipulation, that is where you have a drastic move. So you are now entering trade after manipulation. You will not become the liquidity, but if you enter before the liquidity rate, you become liquidity. So where are the areas you spot liquidity on your chart? Old highs and old lows, and not just any random old high and old low. It must be, if you want to be successful, if you want to point out a high probability liquidity sweep and liquidity range, you need to go always look at liquidity sweep on higher time frame, something like daily time frame, weekly and monthly, or 4 hour, because these are higher time frames, and these time frames, they have the ability to reverse the market. They have the ability to turn the market around. So when you spot liquidity sweep on these higher time frames, they tend to reverse the market. That is the importance. So we have external range liquidity and internal range liquidity. Market moves from external to internal, internal to external. External range liquidity is when market visits old lows and old highs. Then internal is when market visits some PDRs like order block, breaker block, fair value gap, mitigation block, and so on. So if market sweeps an old low, market tends to target another old high. That is just the basic truth. So you need to understand how market moves. That is how your strategy will survive. Let's look at this chart. If you look at this chart, you notice that we have an old low here and we have an old high here. But look at what market did. After we got this move, market came, swept everything here. Market swept everything here, and after sweeping, market aggressively to the upside. That is, after sweeping external, market went ahead and sweep another external. That is external to external. You understand? If I see, let me show you another one. Look at another one again. We have an old low, we have an old high. Look at what market did. Market came here, tapped into this point, then aggressively took out the old high. After taking the old high, look at what market did. Market reversed to the downside to take another external range liquidity. So external to external, external to external. Let me show you another one. We have an old low here, an old high. Look at what market did. Took out the old high. Everybody that was having their stop losses here at this top, market swept everything. After sweeping, market also targeted this old low, sell side liquidity. Then I want to bring your attention to this point. Let me clear here. You notice that we have some reaction here at this point. We have some reaction at this point. Why did we have reaction here? Because this was a fair value gap. So market reacted inside this fair value gap. That is what we call internal range liquidity. And market dropped. If you look at this place, you notice that we still have other block here. We have other block here at this point, and we still have, let me clear here, we still have a fair value gap again here. Stay internal range liquidity. Look at it. The market is currently reacting inside this fair value gap again. So this is now internal to internal, internal to internal, then external to external range liquidity. So if you understand all these things, if you understand all these things, you will see that you are trading, you will turn your trading to another level. You turn your trading to an advanced trading. Let me show you some example on my chart. This is on USDT crypto. This is on daily. Let me go to daily time frame. I want to bring your attention to something. Let me clear this. Okay, look at here. This was an old low. Look at it. Sell side liquidity, and look at what market did. Market came, swept the old low. Look at it, and after sweeping the old low, market reversed with aggressiveness. Look at it, taking all this. Look at all these highs. Took it, took this one, took this one, took this one, until up to this place. Look at this place where market grabbed this high, took out liquidity above this high, buy side liquidity. The market gave aggressive movement to the downside, and on coming to this place, look at, we were having a fair value gap here. Look at it, a fair value gap here. So market reacted inside the fair value gap and also targeted external. Look at now, external to internal, then internal to external. If you see, look at this place, let me clear this one. You notice that this was an old high. Look at it, market came, swept the old high. Look at it. After sweeping, it gave aggressive move to the downside, and after the aggressive move, market also, look at this point. We have a low here, and beneath the low, we have a fair value gap here. So market tapped into the fair value gap, and also look at what market did. After tapping into this fair value gap, market also came, we have a fair value gap again here. Market came, tapped into this reacted inside this fair value gap and gave us move to the downside. So the point is, market targets from external to external, from external to internal, from internal to external. That is how price move. So you as a trader, your ability to spot where we have this manipulation, where we have this liquidity rate, your ability to spot them is the beginning of your success. But if you fail to spot all these things, if you fail to know how liquidity works, then it will be very difficult for you to be profitable, because at every point in time you will always become the liquidity. But if you're able to spot them when it happens, you know, yes, this is liquidity, this is liquidity rate, this is liquidity sweep. When once you are able to spot them, you notice that your strategy will begin to work. That thing you know how to do, that thing you know how to trade will now begin to work. Because if you fail to point out where liquidity is or are on your chart, it will be very, very difficult for your own strategy to work. Another person might use that your strategy, it will work, but you that don't know how to spot liquidity on your chart, you will not be able to use that strategy. So that is it about liquidity. If you find this video helpful, don't forget to like, share and subscribe. Then turn on the bell notification so that anytime I post videos, you'll be notified.